Hello, investors. It's been a very good month for your portfolio. We are nudging 11% plus. And in spite of the market going up, what we've done is we've outperformed. And that's pretty heartening for us because the quantum of bounce back has been good. The last 6 months have been very challenging for us. Obviously, the markets have been coming down and, there has been a bit of underperformance, which we've shared with you, and the reasons also are known to us. But when the markets bounced, and this was pretty much as a follow-up or what we spoke about in the last video with you, that we do think bond yield and commodities will come off, and this will really benefit our portfolio. This has really played out. We have seen that in the month gone by, the US bond yields have come off. That means the fear of inflation has reduced, and this is of course led by lower commodity prices. As I said, that we are quality investors who invest in growth stocks, which have been struggling across the board for the last 6 months. But when this pressure was reduced, immediately our portfolio went up and we put out a very good kind of recovery. So let me share a few slides as usual to sort of explain how things are, where we are, and what are the changes we've made in your portfolio, because we think that this is going to be a very good time for us to make some strategic moves which would help the recovery to be very fast and move into the green. So the first slide I want to share with you is obviously the big one, the US 10-year bond yields. So what you will see is a 1-year chart of the US 10-year bond yields. You will notice that since December Jan, they moved from 1.5 to 3.5. Now this is really big in the world of bonds, because a 200 bips move is massive. It is almost like a decadal kind of move. And along with bond yields going up, you see that the market starts looking at stocks or equities a little negatively. However, as we pointed out last month, we are seeing a good correction. So this has really moved below a very important support of 2.74. You can see it in the red arrow, the kind of decline we have seen in the last month. And the way it is positioned, we feel that bond yields could go lower. This would be very, very positive for growth investors, for quality investors like that. And this will really hasten the recovery that we are seeing. Now, what is causing bond yields to come off? The big buzzword or the big fear was inflation. However, what you will see in the next chart is that in the commodity world also, you can see how correlated it is with bond yields. Commodities went up from 200, the CRB index, to almost 300, again a 50% up move. Along with this, bond yields went up, the fear of inflation was high, didn't really help equities. But what you will notice in the last month and a half is that even commodities have corrected. Case in point, something like Brent Crude, which is very, very important, was in the 120, 140, 130 kind of range. It is nearer to 100. And this, as I said, is not just positive for global equities, but more so for India and more so for our kind of portfolio, which is more growth oriented, which tends to focus on quality stocks, which we know had it tough in the last 6 months. But the important part is that the recovery has started, and this is really what makes us very optimistic and buoyant at this stage. The next I want to share with you is that what has really happened in global equities. Here you can see 23 world markets that we cover, the performance in the last 3 months, 1 year. Now India is a real standout. If you will notice that on a 3-month basis, we are almost flat. On a 1 year, we are positive. And this is in a world where you will find that most readings are in the red. So India not only fell less, but also our bounce back has been sharp. And that is what really makes us optimistic about Indian equities. And your decision to allocate money to India, to have the faith in India, to hold on, and to obviously hold on to our style of investing, which is more into quality and growth, pays out in the long term. We will have periods of underperformance. And as I said, the kind of moves you saw in commodities and in bonds was a decadal kind of move. It is going to be painful, but the important part is over a long period of time, betting on India will make you money. Betting on growth, betting on quality will make you money. And that is something which we feel very strongly about. From time to time, we start doubting ourselves, you doubt us. I know these things happen, but these are times which are testing, and keeping the faith really helps us, and this month is a demonstration of that. So let me share with you a few other markets also that are in the green, but you will find that nothing in the world has really done as well, and we are, I think, one of the best performing markets in the world, which typically gives us a sense that going ahead also Indian equities will be the place to be in. The next slide is the Nifty. Again, for the last 1 year, you will see that we topped out at 18,600 in sometime in October, and we have been declining. Can you see the black trend line? However, in the last month and a half, we've had a vertical move. And we feel that if the market is able to take out 17,500, 17,600, this whole bear downtrend will be eliminated. In fact, we feel we will push well beyond 18,000, and our targets are on a longer time frame, almost at 20,000 plus. So we think that one has to keep the faith in equities. It's a great time to allocate. Yes, we've had a bit of a bounce. It's not the bottom, but going ahead, if we break out from this range, if as I said, bond yields remain subdued, commodities don't do something crazy, we feel that India will be a great investment opportunity. As I said, the last 6 months have been tough, but as the line goes, tough times don't last, but tough people do, and we belong to that category of people. We've made 2 big changes in your portfolio, and I think that is something I want to share with you. One stock that we bought is Schaeffler. Now, Schaeffler is a MNC. It's part of a global German giant, which is very, very up there as far as engineering skills go, precision engineering goes in the automobile industry, in the industrial space. And we really have seen a very, very good performance that is coming through Schaeffler in the last quarterly numbers. And as I said, that we see a very big surge that is happening in the whole automotive space, the move away from combustion to electric, and Schaeffler is up there. Even in the industrial space, they are, they're a marquee name as far as ball bearings go, as far as all things related to engineering and precision, and they are global leaders. Now, this is getting translated to the Indian context, and we feel very, very bullish on that. We bought it early last month, fortunately, and the stock has in fact run up very well from there, but we think going ahead, this could be a very, very interesting space in the market. The second stock we have got into is Coromandel International. We had once made a try or attempt earlier, but we feel that this time what is really changing is that first and foremost, Coromandel is a part of the Murugappa group. So it is, again, in terms of quality, there is no compromise. A very, very consistent, profitable market leader as far as the whole agri space goes. But because of the Ukraine-Russia war, they are, remember, large exporters of fertilizer and crop protection. You find that there is a bit of a crunch, and this is really benefiting the fertilizer industry. Coromandel is, again, quality as far as this space goes. So as I said, that they are very strong in the fertilizer space and in the crop protection area. And we feel that with the kind of monsoon which is seeming to be good, Coromandel going ahead should be a very, very good addition to your portfolio. So we keep making changes, yes, most of them work out, some don't work out. We've had some sour experience in the past, but life goes on. We pick ourselves, we dust ourselves, we do our work, we are active managers, and these are the 2 additions which we feel will add to the recovery, and we feel we will outperform in the times to come. With that, I leave you for this month. Fingers crossed. Hope we can have markets that follow up the kind of pullback that we've had this month, the kind of performance that we've had this month. I leave you for another month. Stay safe. Thank you very much.